I think when you look at all of these sorts of things, whether it's health, whether it's data, whether it's the economy, the inequality, the kind of divides that are there in the markets and in the real economy within countries and between countries, I think the story that emerges is one of choices and diversity. And I would suggest that if we think about the long run, what that probably means is that we'll have a lot more value in diversification and in selectivity, right, in discrimination than we've had lately, right? Lately, whatever the theory says, you've been very well served if you put most of your eggs in one or a few baskets, particularly the United States. I would suggest that the tide is turning, the dollar is weakening. I don't think it's the end of the dollar's role or anything like that, but I think we're coming to the end of the secular bull market in the dollar, and the kind of rampant outperformance of the United States versus everybody else in the markets. And so I think one would want to, as a global investor, one would want to try and put one's eggs in different baskets, because I think with these choices and with these barriers that are going up, trade and investment barriers, at least to some degree, it suggests that we're going to have that diversity and these divergences continue, right? We're going to have different economic cycles, at least to some degree. We're going to have different trend growth rates. Indeed, I think we're going to have different growth models around the world. We have had to some degree for a while, but that's been contained by the degree of globalization that we've had. So if there's a silver lining in this thread of deglobalization, to me, it would be that we'll have more diversity and therefore more benefit from discrimination and diversification.